Hi, my name is Chris Diodato, and today I'm just going through a couple of my strategies. Actually, this is my favorite one, trading using triangles, which is a chart formation, and I'll just go through this really dependable formation today, how to trade it, and honestly, this is the one out of all of them that has made paying for college easiest for me because it's just so dependable and very profitable. So we'll start out. Credibility. Right now, I am a finance student at Penn State University, and let's see, what I know that basically every other finance student doesn't know is I've been doing a study-at-home program for the Chartered Market Technician designation. It's a 500-hour program, basically the equivalent amount of study time for a master's degree. If interested in that certification, the website is mta.org, and that's mta.org. Alright, so right now I'm looking at this chart for GPI Automotive. Normally the trend trader would look at this and say, well, we got a pretty strong sideways pattern. So you have that line, and you can tell the trend is basically flat. But I see opportunity in this. I like to trade the intermediate terms, so I'll take the yearly chart down to the 6-month chart, and here we see the May correction that happened in the overall stock market, where stocks went through about a 15% correction since then, and now I'm seeing a pattern right here. First and foremost, as a market technician, you want to draw your trend lines. These are your main tools for diagnosing what the market's doing. So I'm going to put a price level at about $29, $30. I do that because I see right here that we have multiple touches at the 29 level before going back down. So we have 1, and we have 2, and 3, and these both look like they're close enough to 29.4, and I'll keep those two out. Those are a little too shy for me. So the fact that this 29 mark, about 29, was hit 4 times makes it a significant line. The more times that a resistance, or as it's called, is touched, the more significance it gains. Alright, so now I want to draw my trend lines. Trend lines, intermediate one, you go from the bottoms of the trend and upward. Try and touch at least 3 bottoms, so 1, 2, and 3 barely. And then we have that top price level that I was talking about at 29. Just a second. Let me get that cleared up. There we go. So what I'm drawing right here is this entire shape. Like you can see a kind of triangle looking thing. Alright? That's a chart formation. That's called an ascending triangle, and it is emerging right now. So honestly, I'm no investment professional, but if I would be giving advice, no, I can't give advice because I'm not licensed, but I'm going to say that on Monday or Tuesday I will be buying this stock because it will go up. And we'll see as people watch this in the months to come and say, wow, he might have been absolutely wrong, or wow, he was right. Okay, so this is a very bullish formation, the ascending triangle. As you see, it keeps hitting this line and then dips back down. It keeps hitting this line, and with each dip, it comes down a little bit less, which is showing that the market or the overall trader base wants this stock to go up. There is upward pressure on it. It's just that there is some mental stop or some mutual fund company that wants to sell at this point right here. So eventually that resistance is going to wear out, and it will go up. The measuring formula, as you can see by this line right here, I'm going to change its color. We'll go with green. Alright, we have the green line there. To measure what the chart formation wants us to do, the minimum conclusion from it is from this line, which is the bottom of the triangle, to the resistance line. You measure that exact distance higher. So with this formation, the minimum the price should get to after breaking out of it is $37.50. Alright, so that's an easy one. So I'm going to buy at, say, I normally like to do about 40% in between the lines. So my actual price that I want to get is about $27.60, $27.70, which it might hit in the next few days since it had a good run on last Friday. So I'm going to get in there. I'm going to set my stop loss, which is my fail safe in case I'm wrong. I'm going to set it at 20. I'm willing to take some risk, so I'm going to set it at $24. So I'm going to risk $4 on that trade for each share of stock, and I'm going to set my sell order. Even though it says $37.50 here, the wise investor will say, all right, I'm going to exit my trade a little bit below that, because there's probably thousands of other people who are saying, I'm going to exit at $37.50. So you want to leave a little bit early before the price starts moving down again. So I'm going to exit at $36.50. Alright, so we'll be checking for the days to come how this trade works. Like I said, I am a firm believer in the triangle formations. I think it is probably the most dependable pattern. This is the bullish form of the triangle. The bearish form of the triangle looks something like, hold on. The bearish form looks more like, I'm going to draw it right down here in this corner. It basically looks the opposite, and it's just as dependable. And if you can imagine the stock bouncing up and down in there. Actually, we just had one on Visa, which happened a while ago. Actually, just about 2 weeks. I entered this trade at, I shorted it at $71 right on that day, and I set my measuring, which was the start of the triangle to the end, which brought me to 65. I set that down to, that was my objective. I exited the trade at 66, put in a 5-6% profit before it reversed again. So you need to follow the rules. Never give in to your emotions. All right. For any other questions, feel free to email me. I'm here to help you. And if you feel like making me a couple pennies, click on an advertisement or two. Thanks.